TMG Fireside Chat, Strategy, Leadership, and Innovation in Fire Protection. Uncovering the insights driving growth, transformation, and the future of fire life safety. Welcome to the Mackey Group Fireside Chat, where we dive deep into the strategies, trends, and real-world lessons shaping the fire and life safety industries. I'm John Mackey, and today I'm joined by Ken Wiesenfeld, a seasoned M&A and financial advisor and industry veteran who's been on both sides of the table. In this episode, we'll explore what really drives value in today's market, why recurring revenue is more critical than ever, how to prepare your business for a future sale, and the guardrails you need to protect growth. We'll break the conversations into chapters so you can jump to the topics most relevant to you, and we wrap with a rapid fire myths and reality session to separate fact from fiction in buying and selling businesses. If you're a business owner thinking about growth, transition, or maximizing value, this is your playbook. And when you're ready, Ken and I can help you build a growth and transition strategy tailored to your goals. We hope you enjoy the episode. Welcome to this next episode of the TMG Fireside Chat. I'm your host, John Mackey. In today's episode, we're talking about why every fire protection business should be built to either grow or sell. Joining me today is Ken Wiesenfeld, founder of Wise Financial Consulting, and someone I've partnered closely with over the last few years. I think at this point, Ken, is that fair to say? 18 months?
Yeah, fair to say.
Right. Yeah. And we're going to talk about both of our experiences in helping owners really think through this either build or prepare for a transition philosophy, especially with all this consolidation going on in our market and a lot of activity with regard to mergers and acquisitions. So Ken, first and foremost, welcome to the podcast.
Thanks for having me, John. Appreciate it.
Yeah, I'm looking forward to the discussion. Before we get into the meat of the matter, you want to give the audience a little bit about your background, what led you down this path with regard to advising and the things that you do with your business?
Yeah, absolutely. First, I just would love to clarify. I think you earlier said build or sell, and I think it's build and sell.
That works too.
Hard to do two things at the same time, but I think it's very necessary to think about it in that context. And so, yeah, so I mean, big picture, being involved in M&A, sometimes things happen in life that are painful from which you learn, and you decide you want to, make a business out of it or help others. So my background, when I was young, I was good at math and took an accounting class in high school and kind of killed it and said, well, maybe I'll be an accountant. So that's what I did. I went to college to get an accounting degree. And when I was done, went a fairly traditional route, worked for Price Waterhouse, big accounting firm doing audit. I did that for a couple of years, realized very quickly that being an auditor tracked to a partner or something like that was not my goal. Really loved digging into businesses themselves. And so within a couple of years, found an opportunity to work at a company called Sensormatic and thus started my career in the security industry. And so that was a little over 30 years ago. And but I do say that accounting has always been sort of the cornerstone of the work that I do. Degreed accountant, CPA, took the exam, and ever since have been focused on the impact of financial statements on a business and the importance of focusing on good quality financial statements. So worked at various companies, again, starting with Sensormatic, and then most formatively before I started consulting, I worked at a company called Security Networks. I was there from 2006 to 2013. Got there as a $5 million business, worked with the CEO, Rich Perry, and grew it to a $100 million business that we sold in 2013 to Monotronics. And we were focused on, I think, all of the right things. It was a lot of organized chaos, but we had a lot of fun doing it. We had over 30%, compound annual growth to get to 100 million. And we started with 30 employees and we ended with over 200. And so I had a really great opportunity to build, a great foundation in how to run a business, what to do, what not to do. And so sold the business to Monotronics, which is now Brinks, in 2013. stuck around for a bit, and then started Exit Strategy Consulting. That was the original name in 2014, with a thesis of helping do strategic things for companies in the security industry, whether that was to sell or to do some acquisitions, to get some investment, to get some debt. And very quickly found myself doing accounting work again. And I was happy to do it. It was a good opportunity to get involved in lots of different businesses. And so fast forward 11 years, changed the name to Wise Financial about 2 years ago. And we've worked with somewhere around 225 different companies in 11 years. When I started, it was just me. Today, it's myself and close to 20 folks, team members. And most of what we do today is accounting and finance. We support companies primarily in the space, fire and security, although we do work with companies in other industries. And we provide good, solid, accrual-based, timely financial statements. That's our goal that tell a story. At the same time, I've done a lot of work myself in M&A, and I've carved out a portion of my team, and we focus on helping sellers, and we focus on helping buyers, and sort of two sides of the same coin. And we're very tactical, but we respect the fact that there's this strategic element of getting to the best outcome and how to get there. And that's why I love working with you, because that strategic component sort of is your sort of lead. I sort of focus on the tactical and then circle back to the strategy along the way. So it's a nice combination.
Well, it's a nice story. I think one of the key takeaways for me there was you referenced your time in that growth, 2006 to 2013. Who were you working for again?
Security networks.
Security networks, right? And you
Yeah.
said from 5 million to 100 million in 7 years.
Yeah, it was insane. It was absolutely insane and fun and hard,
Sure. Sure. But I
in all
think it
ways.
reflects some of the growth that we see some of the fire protection contractors going through right now as well. Very aggressive growth models, fueled by investors coming in the space, right? And there's a right way to do it, right? There's key pillars that you and I always talk about with regard to, from the back office, the tech stack, the financial structure, the financial reporting, the rhythm of the business, especially when you're growing that quickly. And then from a strategic perspective, how are we going to grow it? From an operations perspective, what pieces are we going to put in place and how we drive this, the role of people, process, and ultimately, again, the tech stack. So it aligns very nicely. So
Yeah, and I think because I've worked in small companies that have grown, I've got different experiences that I share, and there is no one size fits all. But the theme is, ultimately every owner, and this happens all the time, needs to find a way to work on their business and not just in the business. And ultimately, they get to a much better outcome in the end. The likelihood and probability of a successful outcome is much higher when they find time, make time, manufacture time if they have to, and we can talk about that, to work on the business. I have many examples, and even yesterday, I was talking to someone who I've been courting for the better part of 8 months after being referred by someone who I helped sell and had a great experience. And consistent conversation is, I do want to sell soon. I like what you're saying. I don't have time to devote. And I say, I understand. And you'll never get to that successful outcome if you don't devote the time. So how about an hour a week? Can you spare an hour a week? And now he's making that decision. I'd send him a consulting agreement and hopefully we'll get started, right? So the message is, to me, starts with find the time, make the time, manufacture the time, and we could talk about some of the things that, that an owner can do. Again, we're talking about, the owner that's got a 3 million revenue business to 20 million revenue. Maybe it's them and a partner. And that evolution, at some point might allow them and hopefully allows them to invest in some resources so they can actually spend time working on the business and preparing themselves not only for a sale, but to grow, right? And to work on those things that create the best journey along the way, because you should have fun, you own a business for 20 and 30 years. Hopefully it's not all a grind. And some of that has to be very intentional. And we can talk about some of that as well. So.
No, I agree with you on the intentionality piece. I mean, again, there is a process to this, right? I think, I've talked about um, the timing of it. At what point do I start preparing? Is this something that I can do for 6 months, or is this something that's going to take 2 years? All right. But I think at the end of the day, it's still about a process and really understanding what's the desired outcome and what's the timing around that.
Yeah, and it might take 6 months and it might take 2 years, and that's influenced by, in my mind, two things. One is your commitment to getting it done sooner rather than later, and separately, the complexity of your business, right? I mean, I someone would say, like, how long does it normally take once I sign a letter of intent to sell my business to close? And the answer is there's sort of an average, but it depends. It depends if along the way something comes out of the diligence that everyone says, I got to pause. We got to figure this out before we can move forward.
Yep.
And so that happens, right?
Yeah.
And so my pitch is let's figure out what those things are before you even get into the process.
Absolutely.
So
Absolutely.
there's a lot of thoughtfulness around this idea of being prepared. It's just got to wrap your brain around it.
Yep. Very good. All right, so let's talk about some of the things that these that owners need to think about. So when we engage with buyers, or when buyers look at companies to acquire, um, what do they what do they want when they look at these companies? What's their preferred target to acquire?
Yeah. So there's different kinds of buyers first, right?
Mhm.
But generally, when you talk about what we're experiencing today, which is a lot of private equity, right? Their focus is return on investment, right? I mean, everyone's focus ultimately should be return on investment, but they're really laser focused on return on investment, right? Is this deal a deal that's going to create a return if I invest in that business? And so starts with the financials,
Mhm.
right? And so, as would, be no surprise, that's where we start.
Yep.
Try and step back and we talk about, key elements of the business and some of the strategic points that someone would make when they're going to, to tell their story. But in the end, the financial statements speak first. And again, as is no surprise, um, when you start diligence, it starts with the financial statements. Every buyer will hire a quality of earnings provider or someone who'll do financial diligence, and they'll give you a diligence list, and that's what it will speak to, right? So, what are buyers looking for? They're looking for return on investment. There are a subset of them, and even those that, are a strategic, I'm sorry, a private equity firm or someone investing in a portfolio company will ultimately design that portfolio company with a group of leaders who will speak to what they're looking for when they go out and buy. And they're looking for quality customer base, obviously quality employees, people with experience. In some cases, they're looking for a platform. And so they'll care more about the tech stack, whether or not there are SOPs in the business. Is the business scalable? What will that take? So they'll ask themselves those kinds of questions. And generally, those matter, Sometimes they don't because some buyers already have an infrastructure and they're just going to pull that business into their infrastructure. And they're really looking for quality employees, which are very hard to find generally, and certainly in this industry. I'm talking about sales folks and laborers, right?
Yeah.
Technicians, project managers, very hard to find,
Yep.
high demand, low supply. And so they care about all of those things, but it always does come back to the financial statements throughout the process, and certainly when it starts.
Yeah, I think what you highlighted again, it's a holistic approach, right? It isn't just the financials, like you highlighted. It's the customer base, right? What's the mix of customers, and is there customer density, or is it really distributed and diverse? Quality employees. I would put in that conversation the strength of the leadership team and the depth. What's the role of the owner versus you know their immediate reports and the next level down.
For sure.
Who's carrying the licenses and the technical aspects of the job that allows them to do the work in their market. And I also think that there's a lot of value. You and I talking about offline a lot. Um, the structure and the dependency and the robustness, if you will, of the tech stack, right? How are we capturing the financial reports? What does the data tell us, right? So that's from the financial reporting, but are we using some sort of service management platform to be more efficient in how we get the work done, right? Do we have some control around our inventory and the types of products we have on the shelf and where it's at and what we're able to buy
Yeah,
it.
I think
So,
I think the things that you're saying are a demonstration of why it's important to have these conversations.
yep.
And some owners will care more about who the buyer is, meaning that their circumstances may be that they want to stick around, right?
Mhm.
And so they really care who they're going to work for. They always care because they want to leave their employees in a good place. But my point is that when you have these conversations, and if you want to influence or make some decisions about who you're willing to sell to versus who you're not, you start to it will start to matter how much you're investing in your tech stack, right? Like there's buyers out there today who will tell you my story is I have an infrastructure in place. And so though I care about your tech stack, it won't really exist much longer after we close. And so that doesn't mean, don't invest in tech stack because there's a very high likelihood that when you do, you will end up with a better outcome and you will have better metrics and you will have a more experienced and skilled workforce. It does matter what environment they work in. And so all of those things are reasons to invest. But just know that it's possible that all that you've invested, because this happened to me at Security Networks. I mean, we
Mhm.
invested millions and millions and millions of dollars in some proprietary software to help run the business model that we were running, which was a dealer model. And when we sold for a really high multiple, and we were able to do that for a variety of reasons. And a big reason was, one of the big reasons was our level of profitability. I mean, we were super profitable because we were incredibly efficient because we invested in people and we invested in tech stack. But
Yeah.
the truth is, when the buyer bought the business, they scuttled the tech stack.
Yeah.
And, for months, I probably reeled a bit because of all the energy and effort that we put into building it.
A sweat.
And, but in the end, the lesson for me was don't fall in love with the asset, right? Right?
Mhm.
Because these things can happen and will happen in business. And in the end, we had a great run. And we enjoyed what we were doing throughout, it was hard, but it was also very rewarding. And we had a great outcome in the end. And then I moved on to something else. But my point is that you should make these investments, and you should do it because you'll end up with a better outcome more often than not, even if the outcome is that that tech stack doesn't really it doesn't survive. What survives is everything that the people who worked in your business have learned, and that's really what you're passing on to the buyer.
Yep. I love it. We'll pull on. I'm going to come to. I want to hit one more point specific to deals, but and we'll pull on the thread with regard to some of the, what drives value in the market. So when obviously we're on both buy side, sell side, so we know the language that these investor communities and or the sellers use around EBITDA and revenue. All right. So what does it mean to build or drive enterprise value rather than just focusing on revenue? Right? I talked to a lot of sellers like, oh yeah, I grew my business 30%. And I want to look at their profitability and it's not there because they just didn't have any controls on their cost or whatever else might be putting pressure on the EBITDA. So can you talk a little bit about enterprise value, where that fits and what buyers are looking for in that regard?
Yeah, I did, you gave me a chance to think about some of the topics and though I know we want to be sort of, very sort of back and forth and very real, I did write something down I want to share because I think it's relevant
Absolutely.
here. What I wrote was, as I thought about this, growing your business is more than growing your revenues, right? It's your recurring revenue and your customer base. It's growing your brand, it's growing your culture, it's growing your employee and customer satisfaction. It's growing your infrastructure so that that infrastructure can scale and growing your profits, your EBITDA. And so, you know, um, enterprise value is ultimately sort of that top line gross purchase price that someone will offer you for your business. And I said earlier, and so not to contradict myself, the financials matter most. They're what I call table stakes. But everything else matters as well. And if any of those other elements aren't there, there's a chance that, a buyer won't want to buy the business, right? And let's just talk for a second about growing a portfolio of revenue that that buyers are really interested in today and likely always will be. And that's the difference between recurring and reoccurring revenue and non-recurring revenue. And so simply put, recurring and reoccurring is monitoring, maintenance, test and inspect, retrofits, moves, add changes, certain types of small installs, existing customer work that you get that's repeatable, right?
Yep.
Versus non-recurring, which is installation, large projects, new construction. Both matter, both are important. It's kind of hard, generally speaking, what John, I think you and I see is it's really hard to get a pure play, recurring and reoccurring business of a really significant size. It's sort of like this slow growth. If you're not out acquiring them, it's a much more slow growth, organic way. Just because the unit dollar transactions tend to be smaller, right? So, or if they're not, they're super concentrated, and then you've got, customer concentration. You got a different set of issues. So it's about the mix, right? And ideally, you would lean toward recurring and reoccurring because that's what the sort of the typical buyer will tell you that they're looking for. It doesn't mean if you have an install business that, and it's install only or primarily install that you won't find a buyer. You're likely to get a lower offer, right? It's not as in demand, right? And so this, like every other economic concept, supply and demand matter. And if there's lots of folks out there that are looking for recurring and reoccurring, you're likely to create a bit of competitive tension in a process and ultimately end up with a higher valuation, enterprise value.
I think appreciate the detail there because I think that a lot of people get hung up on just hey, I got to drive to this EBITDA number to maximize the multiple, or I've got to drive my top line here because this is what my friend is learning and as he just did his deal. I think what you just highlighted is that not all deals are the same. Number one, number two, it's about the mix, right? Customer distribution or customer base. What does that recurring or reoccurring look like? But I do agree. I think that we've seen a number of companies that may have a majority being 60% or greater install. That number is the multiples discounted a little bit because they don't have that recurring nature of the business, right? Where
Yeah,
you, like you said,
absolutely.
there's a number of deals where it gets really competitive when you've got high EBITDA and recurring business revenue businesses.
Yeah, and I mean, again, our bias, yours, mine, is don't do this by yourself because if your view is I just need to grow my EBITDA, I need to grow my operating income, you're potentially not going to get the outcome you're looking for. And I'll give you an example. Big part of my background has been in the recurring world. In the security side, RMR is what creates value,
Yeah.
recurring monthly revenue, right? And so there's this sort of like tie back between the valuations that are based on a multiple of RMR or a multiple of cash flow, steady state cash flow, adjusted EBITDA, whatever you want to call it. There's some complexity in the RMR world because there's this notion of creation multiple. We're actually investing in generating RMR, right? Certainly on the residential side, even on the commercial side. And my point is, someone will say, what's my business worth as a multiple of RMR? And I'll say, depends. And they'll
Yep.
say, what do you mean it depends? Tell me about your RMR, right? What's the attrition characteristics? How much, what does margin look like on that RMR, right? Not all RMR is created equal.
Right.
What is your average RMR? Some people sell, for $19 a month and some people sell for $49 a month, right? Margins are very different. What kind of additional services come from that RMR? Some sort of depress the margin, right? The gross margin. So you have to have these conversations to answer the question. And the same thing can be said about an integration business, where adjusted EBITDA is really the benchmark for determining enterprise value. And so it matters to have these conversations, have them early. So if you want to change your pivot your business model, you have time.
Again, the key point, like is it 6 months or is it 2 years? Right?
Honestly,
Your
the
time.
longer the better if you have more work to do. Like, it's about that conversation. If I meet someone and they share with me the key metrics of the business and sort of the characteristics of the business, I can look at it and say, yeah, you're, notwithstanding being prepared, which is a total separate discussion, which we'll have. Are you ready from will you generate interest? Will you generate competitive tension? Will you generate the highest of the range of multiples of EBITDA? It really just depends on what your answers to about your business. Like, what are those characteristics? I have a client now who says they're years out, and thankfully so, because they focus on install and they recognize the need to build their recurring and reoccurring, and they're going to do some intentional things over the next few years to get there.
Yep.
So thankfully, we met. We were introduced by somebody else who sold their business, and caught them at the right time. If they said, "I've got to sell in 6 months," for any one of a variety of reasons, I've got a medical condition, I've got a bucket list I haven't started, all of those things, then it's a little harder, right? You're maybe not going to get the outcome that you're looking for. Doesn't mean you won't get an offer. You just may not get the offer that you want. So.
Yep. Very good. All right, let's pivot a little bit to, we'll dive into the weeds a little bit specific to the core elements for fire protection for the fire protection businesses. We talked about the financials, we talked about the customer base, but doing a little bit deeper, what are some of the must-haves for a growth-ready business? What have you seen that have allowed those businesses to be successful as they get ready to go down that path for growth?
Yeah. We touched on it a little earlier, and so it's probably good to reiterate it. So, sometimes it takes hearing it a few times. I talk about really with any engagement, but just generally speaking, people, process, systems, and reporting, right? And the way that they all connect together. You talked about leadership, and leadership matters, right? But again, getting into the weeds, you need someone, and one of the first questions that you could ask them is, when you sell, um, sort of why, what's your why? And are you planning to stay involved in the business? How many more, I love this phrase, but how many years do you have left in your tank,
Yeah.
right? Is this, I'm ready to be done, this is my goal, or do you have 5 or 10 years? And you're really thinking about this as just reallocating your, accumulated wealth portfolio so that it's not all stuck in your business,
Yeah.
but you do want to reinvest, roll some equity, and continue to be a partner. And that would have an influence on who the potential buyers are as well, by the way, right? So it's about leadership, right? Do you intend to stick around? And if not, what's that second layer look like?
Yep.
And what have you done to cultivate that second layer? And do you have someone to share with the buyer that can easily step in and run the business? Or, and it's okay if you, potentially it's okay if you don't, because the buyer will just have a plan to hire someone to run that business, or maybe fold them into a branch that they already have there. But all these things matter with someone like you or I working together to figure out who the potential buyers are. So this is where it's as much of an art as it is a science, and building relationships with folks who are out there, who have different stories about what they're looking for when they're looking to buy a business. So it's about leadership. It starts with leadership, investments that you make in that leadership group, what their focus is. And then I talk about process, right? So people, process, systems, and reporting. Do you have a scalable process?
Yep.
Do you even focus on process, or is everything in your business reactive? And then systems, we keep calling it tech stack. There are some really good pieces of software in this industry, but I think you and I tend to find the easy fallback for someone who's got 5 to 20 million revenue is QuickBooks. QuickBooks is not an operating system. It is simply a way to gather, obviously you can use it to bill customers and gather and pay vendors, but it's about gathering your revenue and your income to create an income statement, right? And ultimately, that's not what I think the goal should be, right? Is to actually be able to deliver critical metrics that you're using to run the business, that when someone who's looking to invest in your business wants to know about your business, it's really important for them to know that you actually look at the data, that you run the business not based on gut feel. And
Yep.
I, again, could give you lots of examples of where that's not the case. And so I spend a lot of time trying to explain to clients why it's important to invest in a tech stack that will actually allow you to develop metrics that you can look at on a regular basis,
Yep.
daily, weekly, monthly, quarterly, whatever. Some you should be looking at every day. Others don't bother looking at every day. You don't need to know how they're moving. You need to know what they look like once a month, right? And so we have all of those conversations. Tech stack. And then reporting, that's that connection between what data goes into the system and what it allows you to pull out, being thoughtful about the way that that data goes into your environment, and then ideally having some sort of business intelligence tool that is either inherent in that tech stack or overlaid on that tech stack
Yeah.
And it's not just about what you're capable of giving an investor when they're asking. It's about what you're looking at every day and what your team's looking at every day, right? So helping develop and train your maybe ops manager or ops management team who isn't necessarily, that's not where they come from. They come from the field where they're really good at getting jobs done, but they don't know if they made money or not. And they influence the outcome of the profitability of the job. That's where the training comes in. You got to have good tools to share the data and then train them with that data. So
Yeah, I think that, my business, like you alluded to earlier, is focused on the strategy and the operational aspect of the business. And I, like you, speak to people, process, and technology and how we use it. Um, I lead into clearly defined roles and where you have your people on the org chart and the work that they are doing, the right person, right seat. And then the workflow. How do we get work done to align with the tech stack? Um, Ultimately, because I've also said if you don't have the workflow to get the information into the system, you're going to have bad data, right? So, or incomplete data.
yeah,
So,
and I think we'd be remiss if we don't talk about the customer, right?
CRM,
Having, if you
something.
don't have good workflows that
Yeah.
actually consider the customer's role in the process, the notification of the customer, the interaction with the customer, the transparency to the customer, then you're likely to create customers who won't say nice things about you.
Yeah.
And that's important from a marketing perspective. So,
Oh, and exactly. I think, well, to your point, I think that the customer experience becomes the differentiator in the market. Because in today's world, most companies are on some sort of technology and how they communicate and manage work with in the relationship they have with their customer. And so, how do you make that customer experience a differentiator? Make it easy, right? Um, and that creates the stickiness. It's not, hey, everyone gets an invoice, comes in through email or you pay
yeah,
through ACH.
yeah.
But no, what about the communication? What's the
I mean,
connectivity?
and the good segue there is, and it's really hard again for a small business, but again, I'm sure this is part of what you preach, is culture, right?
Yeah,
You want to employ and train and ensure that your employees are focused on that customer experience. And the way to do that is to build a culture around customer experience, not just say it, but demonstrate it. And so again, right, an owner of the business, you do these interviews and you have a conversation with an owner and they'll tell you, you ask them, what did you do yesterday? I put out 6 fires. That's all you had time for? Yeah, unfortunately. Well, then where did you leave time to build your culture, to focus on, on the management of the team that's actually delivering that customer experience? And there's a little of that deer in headlights, right? Like, how do I do that? And the answer is you got to commit intentionally to that side of your efforts, which is to work on the business, right? Whatever that looks
absolutely.
like for you, there's no, uh, you know, there's tips and tricks and there's lists and things you can do, but every business is different, right? Every group of people working together is different. Your rhythm is different. Your leadership styles are different, but you got to find a way to like weave these themes in, which are you want a great customer experience for as many customers as is possible, right? Because if you don't, that's another detractor to value.
Exactly.
Yeah.
Got it. All right, let's pivot again to another topic. Um, you talked a lot about recurring and reoccurring revenue. We talked about why it's important to the valuation of the business, but earlier you made a reference to the types of service work, being ITM, test inspect, move add change, repairs. Um, Go a little bit deeper as to why that is so important.
Yeah, I think big picture,
Mhm.
this connection to those with money who are looking to invest in your business and generate that ROI, they're also looking to mitigate risk. And so, if someone is going to their investment committee or their partners and saying, I've got this business, I'm looking at buying it, here's what I'm thinking the offer should be. If you don't address the risk component, then you're probably going to look like you don't know what you're doing as a buyer. And so recurring and reoccurring revenue is considered more stable,
Yeah.
less likely to disappear when the economy starts to take a bit of a
Yeah.
dip. It may deteriorate a bit, but we all know that new construction, installation projects, big projects, put on pause, put on hold, uncertainty in the market, tariffs, all of that stuff,
Yeah.
and suddenly your big picture revenue items start to get pushed out, you start to get lumpy financial results. And uh, some buyers have a very long-term view and may be okay with that sort of like, dip that happens when the economy starts to turn. And some aren't, right? And so that can get really sticky. But my point is when you've got, which is why people love, security and fire RMR, monitoring contracts, contractual revenue. The fire business itself, people love it because it's statutory in nature and the work that we do is required by AHJ, right? And so um, the more of that you have, you kind of check that box that the risk is mitigated. The other reason is that tends to be the really high margin revenue, right?
Absolutely.
50s, 60s, 70s, 80s. I've got a client with, RMR monitoring in the 90% range,
Yep.
right? I mean, fantastic bottom line EBITDA impact. He also does install, right? So there's a mix, but the focus is on that recurring, and so it's about mitigating risk. I mean, the big picture answer is mitigating risk.
Yep. No, I think that's, obviously, we've seen the playbook as it relates to, one, how to build a business, and then, secondly, how do you become more attractive to buyers. But one of the required aspects of our industry is that we've got to install systems, right? You
Yeah.
can't ignore it. That has to be done.
Yeah.
So how should owners think about balancing their revenue mix between service and install?
Well, so first of all, I mean, I think you and I have also, we've run into companies with owners that have been very intentional about just doing recurring and
Right.
reoccurring.
Yeah.
And again, it's a slower growth model, takes a long time, but in the end, it could be extremely valuable, and it will be, and at least very likely in the market that we're in. Um, it's hard to do that when you have an infrastructure that you need to support, and generating profit from installations is paramount. It's part of your business model, and you just need to. Yeah, I think the issue is just comes back to being intentional. Like, don't necessarily chase projects that don't give you an opportunity to grab some recurring revenue, right?
Yeah.
Always propose maintenance contracts. Look for the opportunity to get that test and inspect as part of that installation, right? And being intentional about it, pricing it appropriately so that you can win all of the business. Um, and, I see lots of companies and owners that I meet that will tell me that they purposefully avoid the bid opportunity. So they train their salesmen to look for direct relationships so that they have a better chance of getting the right kind of margin when they do that work and have more control over a variety of things, the collection process, all of it. So,
Yeah, I think again, it's I wouldn't call it necessary evil, but it is required aspect of what we provide. And like you said, I think that the most of the service companies will find themselves in a negotiated situation where they're doing that upgrade, that move add change.
yeah.
They may not do the full out rebuild because now there's a different, profile as to who's going to manage the project. But it works. When we talk about managing the aspects of install, just given the complexity of that work, what are some of the guardrails or some of the, I'd say the foundational pieces, owners need to think about when managing installation work?
Yeah. Having a job cost environment is critical, and having a commitment to using it not only to gather data, but to gather intelligence around your projects while they're happening and then when they're done and doing that post-mortem. Obviously, that's my lens, right? And it's the first thing I would say, and I'm sure there are other things, but I meet companies all the time that do $300,000, $800,000, million to revenue projects and don't job cost. Um, I think owners are getting smarter and smarter about the need to use a job cost environment. Quite frankly, even QuickBooks has a job cost module, like an environment, a part of the software. But what do you do with that data?
Yeah.
And so without getting too far into the weeds, you should have regular, real-time, weekly, bi-weekly meetings where you put finance, ops, and sales in a room and you talk about active projects that are in progress, the WIP, right? And you talk about here's what we contracted that project for. Here was our planned margin. Here's how many hours we put in the margin. Here's where we are to date on the project, and here's what's left to do. And does that result mirror what you thought when you first proposed the project? And if it didn't, or if it doesn't, why? You must get to the why. And not only really for two reasons. One is to address that project, because maybe you can go back and get a change order. Maybe the customer changed the scope, and you need to be able to challenge the folks in the field to ask for that change order, right? And have that process in place. If you arm them with that process, you need to challenge them to get that change order. And then separately, to learn for the next proposal,
Absolutely.
right? And so there is a fundamental difference between those that don't have job cost and just go by gut, those that have job cost but don't really use it other than a place to gather some information, don't really use it the way they should, and those that regularly use it on a week in, week out basis and build their culture around financial discipline, even for those people who are very uncomfortable in the world of the dollars and cents, right? Ideally, you would hire people that have that mixed skill set. They're really good with people, they can manage projects, they understand the technology, and they have, good financial skills. Or you just have to train them through the finance side. To do that, you have to have a finance and accounting team that is more than just a group of people that know debits and credits. They really understand the connection between that information and the impact it has on running the business profitably. Because in the end, that's what you're looking to do. You're looking to do work that, at a minimum, what you've committed to when you agreed to sign that contract at that price. So,
Again, highlighting people, process, systems, and reporting, right? Even that
all of
job
it.
cost review meeting on a weekly basis is a report out. Where are we at?
100%.
Right?
It's PPRS. It's an acronym, and it's what I live by when I talk to every client. That's where it starts. That's
Yeah.
where it ends. So
Yeah.
yeah.
That's great. Well, thanks for doing that dive on that. One last segment, and we're going to be doing this in a part two. So so we will reschedule another opportunity to continue the conversation. But
Happy
last
to.
segment for this recording piece. Um, you talked about building and preparing for sales. In a perfect world, we want owners to really do both at the same time, right? But growing your business, transitioning business, why should I act now as an owner?
Yeah. Well, and some people are very uncomfortable talking about this, but I'm not afraid to bring it up. And that is that control is an illusion, right? We don't have control. We don't know if we will be here tomorrow. So I will talk to an owner and I will say, among other things, if something happened to you and you weren't here tomorrow, what would your family do with this business?
Yeah.
As an owner of the business, you have to ask yourself that question. And you can't end with the question. You have to answer the question. And there isn't always an easy answer. And I'll use myself as an example. For a long time, I ran my business and it was just me until I started to hire others. And I said, when something happens to me, that's the end of it, right? I bought life insurance. My wife will be fine, this and that. And then I started to hire people. And then I realized that I wasn't being fair to my family under those circumstances, and I certainly wasn't being fair to my team. So I created a strategy. I hired folks at a senior level so that if I said to myself, if something happened to me today, what are the things that I do that others need to know how to do so that the business continues to run? And I have a couple family members that are involved in the business now. Both of my sons are involved. One does my billing and my accounting, and the other does business development. And so I'm confident that the business won't just disappear. It may start to shrink, right? Because I'm a big part of the selling effort. But in the end, my employees will be taken care of long enough for them to figure out what they want to do with themselves if Wise Financial does cease to exist, right? I also have my own exit strategy as a result of being prepared, right? So I asked myself the question and I answered it. And I feel good about the answer that I came up with and the strategy that I deployed. So why now? Because we don't have control. Number one, we don't have control. Number two, hopefully what people will have learned by listening to this is that they can end up with a much better business by having this conversation, working with the end in mind, right? If my goal ultimately is to sell this business, this asset that, created, some accumulated wealth that's embedded inside it, and I want to monetize that, knowing that's what I want to do at some point or may need to do at some point, what do I need to do to put myself in that best light? And it's all the things we talked about: financial discipline, good tech stack, solid leadership, customer experience and culture. It's all the things that we just talked about. And why now? Why not now? Why wouldn't you want to start on building the highest value and have fun doing it along the way? Why would you wait? And the answer is because people are busy. They've got 10 calls backed up, customers, complaining, and employees that are out and they've got to step into the field. I've got lots of clients that I've had meetings canceled because owners of businesses, particularly small businesses, they had someone out and they had to go and do the work. Totally get it.
Yep.
Totally get it, right? But at the same time, you have to find a way to allocate the time to work on the business. And this is all part of working on the business. And so you and I have developed a strategy, series of checklists that we use, questions to ask, that create other questions. But in the end, we deliver a product, right? That involves a data room and financial statements that would be quality of earnings ready, right? And we try and lift up all the rocks to see where the mushrooms are so that they aren't there when they go through a process. And we've had enough examples of folks who have had deals start and stop, and where they've had to expend a fair amount of money in doing so to learn those hard lessons. And I say, prep now, and obviously we feel like we're in a position to help those who want to prepare now.
Absolutely. I think, our client, obviously working on projects together separately, we have, clients that are coming at it from different perspectives, right? Back office financial and how do I structure that, financial reporting aspect of my business. And the other side is how do I, where do I even start with regard to one, where am I going? Two, how am I going to get there with regard to objectives?
Right.
And then hopefully then we come together as a team to then also let's then support the
I
back
mean,
office.
these aren't philosophical discussions. They are very real and necessary to drive to an outcome that
Absolutely.
ultimately anyone who starts a business, I think maybe they didn't necessarily in that moment think I'm getting into it because eventually I'm going to sell it. Some do.
Yeah.
But along the way, they say, I put a lot of blood, sweat, and tears in this. Why wouldn't I prepare it at some point to be sold so that I can enjoy the rest of my life doing other things, whatever that is, find your purpose in
Yeah.
some other way, so.
All right. So one last question then. What's one simple step a business owner can take this quarter? They're listening to this podcast right now. If they get off this podcast, what's the one thing they can do to start moving in the right direction?
Yeah, yeah. I mean, my biased answer is hire us to help you, right?
It's,
That's the
it's,
easy one.
it's,
But in all honesty, don't hire me if you don't have time to work on the business, right? There's nothing that when I experience frustration in working with a client, it's because they haven't allocated the energy, right? So in the next quarter, if all when you get home at the end of the day and you look back at the week or the month and you say, how much time did I spend working on the business versus in? And the answer is almost nothing on and mostly all in,
yeah,
literally turning screws or getting bills out or dealing with your tax account or whatever. Find a way to understand all the work that you do as an owner. Make a commitment to the business to allocate some of that work to others or hire others to allocate that work to, right? So
yeah,
that you actually have the time to work with someone like us or an executive coach, someone who a business coach, someone who will do what we do to help you prepare for that exit. And in preparing for it, as I've tried to be really clear, you end up with a better outcome along the way, right? You're
absolutely.
focused on these four components: people, process, systems, reporting. It's not just about putting them in place so you get the highest EBITDA down the road. It's that your employees have a great experience. Nobody wants to work in a place where everything is reactive, right? That's not a fun place to work. So create a fun environment. The only way to do that is to work on it. And so in the next 3 months, find a way to allocate time to work on the business. That's my advice.
I think that's great. I mean, I think that to your point, the businesses that have scaled, have grown, have followed those core principles, either the services that we've provided them and or they've learned from somebody else. But at the end of the day, that's the fundamental pieces to the playbook and how you do
Yeah.
this.
Yeah,
So
and come at it with some patience and be
sure.
compassionate with yourself when you can't find the time, but make the time to uh, to do these very simple things, right? I mean, it's what I said I did for my own business. I said, you know what? I get up every Sunday morning at 5 o'clock in the morning to get my, pay my subcontract team and to bill and get my bills out. Why would I do that? Let me just find someone. Let me pay someone to do that so that I can actually, if I'm up, think about ways to market my business. Think about ways to prepare my own business, and what does that look like? And I had to be very intentional about that. It took me a long time to get there, and so I don't beat myself up because it took me a long time.
Part of the dream.
But I finally intentionally decided I'm going to do this. And then I did it, and now I feel much better looking back. It was the right decision. So,
Yeah. That's great. That's great. Well, Ken, thank you for getting back together. I know our first conversation we ran out of time, so this will be part two for our recording. Hopefully, for the listeners, this is still part one for them because it's a seamless transition. But since we're calling it out, I guess it's not seamless at that point. Uh,
you're
so
fine.
for the benefit of the listeners, and I think for ourselves as we kind of refresh where we're at, up to this point in the conversation, I see three common themes, right? First, we said business owners need to intentionally make time to work on the business and not just in the business, focusing on people, process, systems, and reporting. What was your acronym there? I guess it's pretty simple, right? PS.
PPRS, PPRS.
PRS, right?
Yes.
To create long-term value. Very, very important. And thank you for the reporting piece. I've always been people, process, and technology, but the reporting, obviously, it's great that you capture all this data, but what are you going to do with it? You got to report on it, right? So
Yeah, it's the missing link to all of it, right? So,
it really is.
yeah.
The second key point from the first half was recurring and reoccurring revenue, like maintenance, testing, inspection, is critical for mitigating risk and creating more attractive businesses for potential buyers, right? We know that in the service model. We've seen the transactions over, the 40 and some that you've touched, the 30 some I've done. Um, I mean, it's the playbook, right?
Yeah, I mean, lots of questions that buyers want answers to, but as I think about what I've heard them react to most, that's definitely one of them, right? So,
Absolutely, absolutely. And I think the last common thread um, is around preparing, right? So preparing for a potential sale or transition is essential now, not later, because control is an illusion, right? We talked about that a lot. And unexpected life events can impact business continuity. Owners should develop strategies that protect their business, employees, and families' interests.
yeah,
You hammered home on that again. Like I think you said, control is is that illusion. So
I do. I also think there's that we don't have control over our destiny, whether we're here tomorrow or not, but things come up also, right? You want to take vacation and you want to, oh God forbid, you end up in the hospital or something happens. I've had clients that have had long stints away for medical reasons, and it works best when you've figured out how to remove yourself as the owner of the business as much as you can from the running of the business. And that is very helpful to this effort to sell at the point when that's your story to the buyer. It's also allows you the time if you allocate to it to work on as opposed to in, right? So it kind of all makes sense, right? So
yep. All right, so let's kind of like weave this back and forth through everything we've talked about. I think we've recorded for about 45 minutes now. So kind of like it's part of a summary, right? Let's go through this lightning round, if you will, around myth versus reality, just based on your experiences, what you've seen, and some of it might be redundant with regard to how we've teed it up in the first part of the podcast. But you know, one of the myths I keep on hearing about, you just alluded to it again, is that I don't need to worry about selling. I'm not going anywhere for 10 years. So again, what are some of the key points around that? Why should someone think differently about that?
well, first, I think what I have found, and hopefully people trust our experience, yours and mine, is that this exercise of being ready actually influences elements of the business, and you create value, right? I mean, part of our discussion, is about growth and growing the business. in the context of how do you get the most value? Well, it's also something that you want to pay attention to intentionally, as opposed to just coming in every day hoping that you're getting the contract that was put out, to your sales guys, right? To win the bid, right? And so how do you do that? You talk about different markets you can be in. You could talk about your marketing strategy. Like we're sort of forcing some of that conversation as an adjunct to being prepared, right? So that's one of the reasons why it's a great idea to be prepared. And the other is you may say to yourself, it's 10 years out. You may get a great offer tomorrow that you didn't expect to receive. And why not be prepared for it? To me, it's just a lot of intuitive sense all the way around.
Yeah, and you and I've talked about it, right? To me, it's about leverage points for the owner seller, right? The more prepared they are, uh, um, the steps they take to put the pieces in place, the foundational pieces in place to get ready, just give them more control at the table, more control through the process in the context of how do you manage the deal, and not being over leveraged with regard to the transaction,
Yeah,
right?
I think there's all of that. I also think there's an element of peace of mind, right? I mean, I think there's most people, not everybody, but they get peace of mind out of being prepared for something. And you went to the trouble to build a business and put 5, 10, 15, 20, 25 years of effort into it. Just make sure that it's ready, right? And with that comes peace of mind. So
Absolutely. Great. Great point. The second myth, I guess I want to, drill down a little bit more is that buyers only care about revenue. What's your take on that?
I don't know where that comes from. Like, I, I, I very rarely, if ever, on the rarest of occasions, I'm not going to say never, encounter buyers who even not only care but value the business based on its revenue, right? So if valuation, which is what you're ultimately looking for when you sell, is about cash flow, earnings and profits. That's where you should be focused. And so I've got lots of experience, I think, as do you, at least in the fire and security industries and some others. And I've never heard that as a benchmark for value. So
Yeah, I apologize. My dog was barking there. So if I reiterate what you said, I was distracted by the dog. But I think what you said before was obviously they pay for margin, they pay for the systems, the tech stack, and the reporting, and the leadership, right?
at least in fire and security, right? That maybe there's some industries,
Sure.
some SaaS revenue, like tech firms that it's all
Yeah,
about the revenue and they're, pre-profit or whatever, and there's value there. I'm not saying never, I shouldn't say never. But if our audience is those who are blood and sweat, install, service contracts, sprinkler, fire, security businesses, that it is a myth to think that you can just grow your revenue and you'll have something valuable to sell down the road.
agree. Yeah, no, you and I know stories very well about what software companies are trading for right now, and I think a lot of fire protection companies would say, "How do I get those numbers?" But
Right.
that's not the side of the market we're
The answer is get in that business, right? And maybe
in.
you sell your fire and security business, get a nice check, and then you do that, right?
And then
That's
you go
what
start that
you
one.
do, right? So,
Understood.
yes.
Understood. All right, let's pull the thread a little bit more on systems in the tech stack, right? The myth. I'll fix my systems and processes after I grow it a little bit more.
I actually hear that, and
Yep.
and I
So
do
do I.
laugh a bit in my mind, right? Like I get it, I get it. People have trouble leading in with investment on something, on anything sometimes, right? Some owners. I think you got to get past that when it comes to your tech stack, because, well, for lots of reasons. But if you want a scalable business, you have to be on a solid tech stack that's properly vetted and thoughtfully implemented and people trained and all of those things. And QuickBooks, it's a great little piece of software, but it's just that, it's a little piece of software. And I've seen 30, 40, 50, $60 million revenue businesses end up on QuickBooks over the long haul because they just got lazy about looking at other things and pulling the trigger, and there was never the right time. And trying to get an investor with a business of that size in QuickBooks, I'd say good luck with that, right? It doesn't mean that they only and always care about, the tech stack, but I do think it's highly influential. And I also think you're selling yourself short by not implementing something that is helpful to running the business. I mean, that's really the bottom line.
Yeah, agree. A firm believer in the strength of using systems, and good data drives good business decisions. And obviously, to make the decision to sell your business also is going to be reflective of the financials that you have and how much you can really get out of that as it relates to your business
Yeah.
performance.
I see people with, good businesses, even great businesses, unsophisticated tech stack, and poorly trained people still sell their business successfully. Like it's not an all or none kind of thing. But if you're going to take a chance and you're going to think through this thoughtfully and logically, make those investments in your technology and your people, and there's a much higher probability of getting the kind of return that you're looking for when you sell. They're
Yeah,
just it's all about managing, probability.
absolutely. Great. Another thing we talked about earlier in the podcast is the difference between installation work and service. All right. So the myth would be installation drives growth. Service is just maintenance, So what's the difference there?
Um, yeah, listen, we talked about it, earlier, and ultimately, when someone is about to write a fairly large check for your business or assess you as a leader, as a successful business person, there are certain metrics that they care about and look for, and including margin, gross margin, and EBITDA margin. And in some cases, without healthy values in either of those, you won't even get an offer for your business or get somebody to invest in your business, right? So this is another one of those very intentional parts of running the business where yes, you need the install revenue. Install revenue creates opportunity to pitch service contracts and pitch recurring revenue contracts. So there's a balance. I think that's probably for this myth, that's probably the key word is you got to find the balance. You can't focus on just install. That's unlikely to work in the long run. Companies do it, and they get the 3 to 5 multiple, of EBITDA offers. That's not really what most of my clients, as I meet them, are looking for. They want the high end of the range, and they want the range that is measured, by some of these important balance issues in your revenue and your margin mix. But it is hard to grow, recurring services businesses fast, right? And so, but you just have to be focused on it. I've got some clients who essentially just do install. When you ask them about recurring, they're like, we're going to implement that,
Yeah.
right? And if your time horizon is 2, 3, 4, 5 years, it'll be a little harder to get there. But again, you'll have a business that you can sell. You'll just have you should just manage to a different price expectation.
That's a great point. The one thing again, a lot of my clients are looking at the market of, around insulation. Hey, it's been a solid performer for my business and it's worked for me and my family, whatever it might be. The What I always try to coach them around is establishing some guardrails, right? Manage the jobs that you can manage that are really within your wheelhouse. Don't take on a big elephant of a project. Um, put some good job cost methodologies to it
Yeah.
with regard to overall performance. Really understand how well it does truly perform. And I think you said it in your response as well. The opportunity to convert that installation job into a service contract or recurring revenue after it's been installed is where the value really, bears more fruit over time. So,
Yeah, I don't recall as we have talked today that we talked much about job costs, and so I know it's a little bit of a segue, but I do want to make sure that people recognize the importance um, uh, of job costing, right? Looking at financial statements and measuring your business and your profitability and performance is just part of what this industry requires, and certainly what buyers require. They want to know not sort of over time, on an overall basis that you make money on your installs. They want to know how you do on each of your projects. And they want to understand and learn what was your sales proposal methodology? How did you ultimately do relative to what you thought? And what did you learn from that? And how did you make modifications, right? So the only way to do that is to implement job cost, which means that you can't just process bills and process vendor payments, you have to create jobs, you have to code hours and materials and purchase orders to jobs, and you have to manage them methodically week in, week out, which by the way is a good operating process with your ops team who may or may not be financially sophisticated. That's another issue, that everyone should focus on when you run in a business that does installs. And I have, some folks that I've met over time, and I ask lots of questions when I meet them at first to understand the business. And the minute I hear that they do large projects of long duration, the follow-up question is, are you job costing?
Yep.
Okay, yes, that's great. Do you do POC accounting? What's that? And then we talk about percentage of completion accounting and why that's important to, consistent monthly operating performance reviews. If you don't do it and you just do completed contract or hope for the best with progress billing, you sometimes get a misunderstanding of what your true operating performance is, right? Earnings, profits, EBITDA, all of those things. So
Yep.
just segue for a second down a rabbit hole, but I think an important one in this industry for people who are listening. If you're not using job costs, you should. If you are using job costs, really focus on it. And there are very specific ways to do that. So,
Yeah, the net, part of the story I always share with people that aren't necessarily comfortable with job costs or POC accounting is that, it's a good muscle, right? This is a financial muscle you have to develop. And the more you apply job costs and POC, your financial muscles get more defined and you have a much better grasp, stronger grasp of your business and truly how does it perform. So it's a
yeah,
good,
I mean, things as simple as change orders, right? If you're not job costing, what are the chances that you're going to get change orders for changes of scope in the field? You hope
yeah,
you have the right people out there, representing you, but it's a pain. It gets in the way, right? They'd much
yeah.
rather just finish the job. But if you're measuring their performance, it's going to be very obvious when there's a problem, and create discipline around change orders. So yeah, you've got to invest in job costing. But when you do, this is one of the results, right? You end up making money, right? It's an investment with a proper with a return on investment. Is my experience.
No, and I did, completely agree with that. All right, the last myth. All right, I think it's a question that we get from a lot of people we talk to, prospects, potential clients, people that we talk to. And so the myth is, I can do this by myself. I can go it alone. Why should I bring in outside advisors?
Yeah, it's hard to answer it without sounding biased, right?
Yep.
But I think it's important to if you're someone who believes in that myth. We just ask that you talk to those who have souls, right? And feel free to find some folks who did it by themselves and ask the question, and find other people who realized, quickly that they needed somebody and then got somebody. There are very specific reasons why. I'll give you some examples. I don't know what most of the owners that I've met with, they don't understand adjusted EBITDA. They don't understand the adjusted part of adjusted EBITDA, nor EBITDA. And so you're gonna be poorly matched against that big boxer in the ring called the buyer who lives by that term. They don't understand what cash-free, debt-free means. They don't understand what net working capital targets are. There are some fundamental things that are important to know. They don't necessarily understand or appreciate deferred revenue and what kind of impact that's going to have on the purchase price. And so what they tend to do when they negotiate on their own behalf is they deliver financial statements that don't really represent the business in its best light. I've seen PDFs for annual financials without any adjustments down to net income that people on the buy side have to. It could be as simple as we add value because we know what the buyers are looking for. And that has proven itself time and time again. So lots and lots of reasons, some very specific and tactical, but ask around yourself, right? The difference between the two, and find people who've done it one way or the other and see what they say.
Yeah, I think uh, fresh perspective, bring in the experts that really understand certain aspects of the business. We all have core strengths. Not every one of us are built with a financial mindset or an operational mindset or a technician mindset. So that's why you surround yourself with a really well-rounded team of people, right?
Yeah, I think the other reason is that you're busy running a business, and selling a business is a project, and having someone help you prep and be prepared, have a better understanding, arms you better to have, the ability to get a better deal. And then working your way through to the finish line, the level of stress can be super high. Talk to anybody who didn't have help. I think what they'll tell you, generally speaking, is this was really challenging, took longer than I thought, and was painful and stressful. And it's so in those cases, it's always good to have somebody, helping you. And that's the feedback that I've gotten from my clients. And
Yep.
it's always humbling to hear it, but it's evidence in my book that it is a myth to try and do this by yourself. So.
Agree. Thank you. All right. Last question. Why should someone work with either you or I on a project?
Yeah, I think the combination of the two of us, the answer is that we collaborate really well together, right? We have strengths that complement each other, and those that we have worked with have benefited from that for sure. I think our approach is about prep, right? Yours and mine, which I think is very different than most. We're operators by nature. I was the CFO for years, sat in the seat. You were an operator yourself for many, many years and decided to be a consultant. And so for us, it's about being ready. And the way to get ready is to prepare years in advance and be very methodical, intentional. And so are we the only ones? Maybe not. But I think generally speaking, in my view, we're as good as any, if not the best, at doing this in this industry. And again, I think it's all about testimonials and happy to share those. Those aren't my words. Those are the words of people that thankfully we've had the pleasure to work with over the years. So,
Well, I think it's a great view. I'd like to add to the fact of, like you said, we complement each other very well, right? Your financial back office perspective with regard to technology reporting, and how we manage the business, and my view coming at from an operation strategy perspective in the front end of the business about how do we manage growth. And the analogy I use with my clients is, let's put together a growth strategy. That growth strategy may take us down a path of, okay, we're going to grow top line and bottom line, and we're going to do these 5 things to get there, 10 things. But along the way, it's going to identify off ramps as to where, first opportunity to transition, second opportunity to transition, third opportunity to transition. And as we've said throughout this whole podcast, it's about the process, and the earlier you start, the better prepared you are, so that ultimately you can make the best decision for you and your family.
absolutely.
And so, to your point, our shared experiences across this great industry of fire life safety, we're able to bring all those experiences, good deals, bad deals, all the black eyes we may have gotten along the way because we've just bumped our head so many times and had to learn ourselves.
Yeah,
We
and
can share that with
experience
our
with
clients,
experience
right?
with buyers themselves, knowing
Oh,
what their pressure points are,
yeah,
knowing who the buyers are.
yeah,
That, is one of the most important elements of marketing a business is
yeah.
knowing who to put it in front of, who's going to
Well,
express interest, right? So,
yeah. And the complexity of the market, right? You've got buyers that are coming in for the first time, or they've been doing this with their 100th deal, right? Their expectations are completely different. So how do you navigate that? And
yeah, I
so,
mean, circling back to why should someone do this with an advisor? That one issue, just trying to figure out who the right buyer is, the best buyer, who the universe of buyers is a huge, huge value add, right? Huge value.
absolutely,
Yeah.
absolutely. Well, Ken, let's wrap there. All right.
Thanks, John. Appreciate
So
the opportunity to chit chat today.
this was great, Ken. Really thank you for the opportunity. I know you're super busy. We had to break this into 2 parts because we're both double booked, right? Hard stops each time, but really, thank you for taking the time to get on the podcast. You and I talk about this stuff every week, and just grateful for the opportunity to share, your view, our view with the audience. And again, thank you for the time.
You bet. Thanks so much, John.
Thanks for joining us today for this episode of the TMG Fireside Chat. If even one idea today sparks a way to grow, protect, or prepare your business for the future, we've done our job. When you're ready to talk through your own growth and transition strategy, whether it's scaling for the next decade, positioning for acquisition, or preparing for a sale, connect with Ken or me directly on LinkedIn or visit MackeyGroupLLC.com. And don't miss our Myths and Reality mini-series for quick, actionable insights pulled straight from today's conversation. Until next time, keep building with purpose and always plan for what's next. Have a great day.